Interest rates are down, mortgage rates up. Not how things typically work in our economy, but these indeed are some strange times in this country. Will Thursday's Fed meeting bring welcome change to the housing market, or will a second Trump administration be the light at the end of the tunnel? Let's ask Jeff Ostrowski. He's a mortgage and housing analyst at Bankrate. Joins us now on Cheddar. Good to see you, sir. So, first, how do you explain that dynamic playing out with interest rates going down, mortgage rates going up?
Yeah, well, as you said, it's a strange dynamic. Generally, mortgage rates move in tandem, not in lockstep, but sort of in tandem with Federal Reserve policy. So if the Fed cuts its benchmark interest rate, mortgage rates probably are going to come down, and that's certainly what happened during the pandemic. So the Fed slashed rates to zero. We saw mortgage rates go all the way to 3%, even below 3%. And then since then, things have been a little weird. So the Fed raised rates a lot. Mortgage rates rose even farther. A year ago, mortgage rates were at 8%. And then back in September, when the Fed cut rates for the first time since the pandemic, mortgage rates had plunged all the way to 6.2%. So that was almost a 2 percentage point decline in mortgage rates. And the Fed had cut rates only half a point, or it hadn't cut rates at all, but they were leading into their half a point cut. And then since that half point cut, mortgage rates are back up. They're closing in on 7% again. So definitely a strange dynamic. And I guess the lesson here for home buyers, homeowners, is that the mortgage market sort of does its own thing. I mean, the Fed has some influence, but there are other factors at play as well.
It's that point that I'm curious about between 6 and where we are now. How do you quantify that? Is there anything driving the rates back up?
Yeah, it's so there are a few things, and I'm hesitating just because it's such a murky picture. It's hard to know exactly what's happening. So for a while, the idea or the narrative was the Fed was going to start cutting rates and they were going to keep cutting rates. And now that's not quite so clear. The consensus is that the Fed's going to cut rates a quarter point, 25 basis points. That's not certain. But the wild card now is Trump's victory. So the combination of Donald Trump moving back into the White House and Republicans gaining control of the Senate is that everyone's expecting big tax cuts and big deficits. And that's going to force the federal government to issue more debt. And mortgage rates are pegged off of 10-year Treasury yields. And so if 10-year Treasury yields go up, then mortgage rates are likely to go up. So definitely the narrative has shifted over the past 6 weeks, or has shifted over the past 6 weeks from Fed slashing interest rates to now, maybe Fed's not going to cut interest rates so much, but we're going to have bigger federal deficits, and that's been pushing rates up.
Yeah, we don't hear anything about deficits from either party, in particular the one that for decades led on debts and deficits, being the Republican Party. Have I missed it, or has now President-elect Donald Trump, did he say anything during the campaign about what he would do to increase housing supply or drive down prices?
No, and it probably to his credit, he didn't say much about that, just because the president doesn't control the housing market. There's really not much a president can do to spur home construction, to push down housing prices. In fact, there had been some concern that Kamala Harris's proposal for a $25,000 tax credit for first-time buyers would increase demand and just make it even harder for those squeezed first-time buyers to afford homes. So it's pretty hard for anyone in the federal government to directly control home prices or the housing supply. A lot of those decisions about approving new construction or making zoning rules less onerous happen at the city and county level as opposed to the federal level.
Yeah, that, and of course the big home buyers out there who are reluctant to build, to pour in supply with the economy the way it is, with interest rates where they are. If there is one person who has some control, it is clearly Jerome Powell, the Fed chair, who will speak tomorrow. What do you expect, and what do you think the impact will be?
Well, the consensus is a quarter point cut, as I mentioned. I mean, if that happens, that's sort of what everyone's been expecting, and it's already been baked into mortgage rates. I guess there could be a surprise. I don't think the Fed is going to do another half-point cut. That would shock everyone. I guess so. I think the choices are either a quarter-point cut on top of that half-point cut from 6 weeks ago, or that the Fed decides to do nothing at all. It's possible that they come out and say, well, the economy is growing more quickly than we had expected. Inflation's still a threat. The job market is strong, and they could decide not to do anything and just sit on their hands for this meeting.
Powell has been as mystified in these press conferences by the housing market as you or me or anyone, quite frankly, being one of the smartest person on our economy. So with what you said there, that you think that 25-point cut is already baked into mortgage rates, where do you think they go the remainder of the year and really throughout 25?
Well, it's the story keeps changing, the information keeps changing. So, the consensus had been mortgage rates probably going down to the 6% range by the end of 2024, maybe a little under 6% in 2025. And now that whole story has shifted. Now the dominant narrative is deficits, rising Treasury rates, and therefore mortgage rates edging back up. I don't think they're going to go back up to the 8% that we saw a year ago, but they're not going to go anywhere near what we experienced during the pandemic, barring some other economic catastrophe.
Most importantly, though, where do you think mortgage rates need to go in order to really thaw out what has been a frozen housing market for quite some time?
Yeah, we did a survey on that this spring, and the unfortunate or sort of the harsh reality is that a lot of Americans have unrealistic expectations for mortgage rates. All those homeowners who locked in rates at 3% are waiting for rates to come back down to 3% before they put their house on the market. That's really not going to happen, and if it does happen, it's because something very bad has occurred in the economy. So there's no clear path for what unfreezes the housing economy, what gets homeowners out of their homes. I think everyone had been thinking of 5% as the magic number. If maybe rates get down into the high fours, that would unstick and unfreeze the housing market. But that seems very unlikely. Now that we've got mortgage rates close to 7% and possibly heading back above 7%, it just seems unlikely that we're going to get 5% anytime in the near future. So I guess it's just going to be a long process of American homeowners and American home buyers getting accustomed to this new mortgage rate picture.
Or just stay stuck until at least 2026, which in all honesty looks like the likelihood right now. And the lower mortgage rates go, we could see home prices that are all-time high actually continue to spike. So let's try to end on some good news here, Jeff. Those who have bought homes in the last several years, are you able to quantify how much equity, how much wealth they've been able to build off of that?
Yeah, it's been trillions of dollars of equity. So American homeowners are doing very well. Buyers, especially first-time buyers, are really struggling. But homeowners are doing very well. They're sitting on a ton of equity. They've tapped some of that equity through refinances or through home equity loans, home equity lines of credit. But they haven't done so in the reckless way that they did or that some did during the 2005 to 2007 boom. And so American homeowners are sitting on a lot of housing wealth, and they're doing pretty well. The downside to that is nobody wants to move, and their kids are going to have a really hard time affording a house in this market.
It is a tricky situation. Jeff Ostrowski is a mortgage and housing analyst at Bankrate. Appreciate you joining us, Jeff. Thank you.
All right. Thanks a lot.